In this talk, we look at our vision for stewardship investing for sustainable prosperity. We currently have what we think is a weak system for stewardship investing, and we want to talk to you about how we can flash out of that present weakness and into a future of strength. Let's start by talking about stewardship investing. These are investors that have some very unique capabilities and also have some very unique needs to achieve. That makes them very different from individual investors. They invest large pools of capital, they invest in perpetuity, they are purpose-driven to achieve specified required returns and to sponsor specified desired values, and they are governed by a charter of trust that determines what their returns are that they need and what values are that they have to sponsor. Of course, when we talk about stewardship investors, we're talking about pension plans and university endowments, charitable foundations, and other similar institutions. Now, the current default practice for stewardship investing today is to pour all of their entrusted funds into the investment banking business. There, their capital gets deployed to buy and sell listed securities and increasingly to trade in other hedge fund-like alternative assets, always dealing with other investors, not directly with businesses. The outcomes that they're getting from this deployment of capital through the investment banking space on the financial side increasingly include a misalignment of costs to benefits, far too much miscreant market manipulation, very erratic returns, increasingly inadequate returns that sometimes even threaten a loss of principal, all from transient ownership of trading positions. On the societal side, this gets them into a condition where they are actually perpetuating recurring cycles of boom and bust, where prices rise based on trading activity that divorces from underlying value creation until the prices get so far divorced from reality that people won't bid them up anymore and something causes the bubble to burst. And we've seen most recently in the financial crisis of 2008 that when these bubbles burst, the consequences can be catastrophic, not only for the stewardship investor and their portfolio, but for all of us and the entire economy. There also is a problem because trading doesn't recognize any value other than price, and therefore it ignores all of the non-financial impacts that stewardship investors are having on the economy. This is not that they don't have any impacts, it's that the trading system ignores them all. And that's part of what contributes to the boom and bust cycle. And so that's why we say the present situation is quite weak and really not sustainable. So let's flash out of that weakness and show how we can flash into a future of strength. First, we start by taking stewardship investment out of the investment banking business. Instead, we have stewardship investors agreeing directly with values-driven business leaders on the equity splits in a negotiated base case cash flow waterfall. This takes their money out of the buying and selling of transient trading and directs it instead directly into real new value creation in the real economy. The impacts this has on the outcomes of their portfolio include far superior financial outcomes, costs will match benefits, they get the transparency of dealing direct, they get constancy of negotiated returns. This provides them to get the returns they require to meet the missions of their charter of trust and to preserve their principal through participation in value creation. On the societal side, we get economic adaptability, we get financial authenticity, earnings integrity, global community, resource resiliency, and even the big issue of the day, climate stability. These values, if they fit within the charter of the stewardship investor, can be built into their direct investments in their portfolios. And so that's how we build a future of strength for stewardship investing and sustainable prosperity.